Good morning, you're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor, Ankita Saxena. Straight up, let's look at how the US markets fared in trade yesterday. Ankita, 1% down taken all the major indices that were seen yesterday?
Yes, absolutely. Yes, Amit. In fact, the markets seem to be very exhausted right now as we come to a close of this year. It seems like investors are not really expecting any big technical rally and they just want to get to the Friday afternoon close. As we can see, Dow Jones Industrial Average lost 365 points or was down 1.1% in trade. The S&P 500 lost 1.2% and the Nasdaq Composite dropped 1.3% in trade yesterday. Now, Apple weighed heavily on the Dow as it broke a key level and fell another 52-week low. Energy was the biggest laggard in the S&P 500 as oil and natural gas prices slid yesterday. Now, let's look at how the European markets fared. European markets were mixed yesterday. The Pan-European Stock 600 reversed initial gains to inch up 0.1% below the flat line by the close. FTSE was closed for public holiday on Tuesday that opened up yesterday. It finished the session in the green, up 0.4%, and DAX and CSE were both down 0.5% in trade yesterday. So clearly, investors are basically waiting and watching for 2023, but not expecting any big rally coming anytime soon, Somit.
Well, on the commodity market, if you see the oil prices, now they settled lower on Wednesday because of the concerns of rising COVID cases in China. Now, earlier China had eased off its COVID restriction policies, and China, do remember, is the world's largest oil importer. So there were optimism that there would be a demand boost coming in from China, but because of the rising COVID cases, we have seen some slip in crude oil prices. Now, China will earlier had said that they will stop requiring inbound travelers to follow the quarantine rules from Jan 8th, but this is a major step when it comes to easing the COVID policies. But Chinese hospitals currently, if you see, have been under intense pressure due to the surge in COVID infections in the country. Brent crude is currently trading around the $83 per barrel mark level. When it comes to gas prices, in US gas prices plunged to its lowest since March ahead of the contract expiry and as production was also ramped up in the country post the winter holiday disruption that we had seen. Also, forecast of a warmer weather kept the prices lower in trade. Now, a mild winter is expected in many parts of Europe. Along with this, rising wind power generation and lower electricity consumption have been keeping the European gas prices on a lower side. But do remember, after falling for nearly 7 straight sessions, yesterday, there were some marginal gains that we had seen in European gas prices. However, compared to its recent peak of €149, gas prices have fallen nearly 46%. Also, do remember that the natural gas storage in European countries is at around 83% of capacity, which is above the 5-year average and also unchanged for weeks. Now, meanwhile, in Asia, if you see, the gas prices continue to remain stable around the $28 per MMBTU mark. And lastly, at the gold side, if you see, gold prices dropped by nearly 1% on Wednesday after reaching a 6-month peak in the previous session, and this is on the back of a stronger dollar and a higher treasury yield which weighed on the gold prices. Now, both dollar index and the benchmark US 10-year treasury yields were at their near session highs in trade yesterday. However, as indicated, the volumes continue to be lower as per brokers. Now, do remember that gold prices have still risen around $200 from their September lows, which was at 2-year low, the prices in September, and this is on the fact of expectations that the US central bank would slow down its pace of interest rate hikes, which would increase or which would make gold more appealing to investors.
Right, Somit, now let's quickly go through what are the events to watch out for in today's session. First up, US jobless claims data will be coming out tonight, so do keep an eye out on that. We also have the Nifty recapping adjustment which will happen today, but the changes will come into effect from tomorrow, which is 30th of December. We also have the monthly FNO expiry today, and there are a couple of corporate action happening also. We have a listing of 81.4 lakh shares, new shares for Tata Steel, and we also have the listing of 17.4 crore new shares for Shriram Finance. So these are the events to watch out for today. Do keep an eye out on them.
Well, moving on to some top global news. Firstly, the Biden administration will require airline passengers traveling from China to test negative for COVID before entering the country. Now, this is amid growing concerns about widespread transmission of the virus in the world's most populous country, that is China. Now, passengers from China will need a COVID negative test to enter the country. The guideline kicks off from January 5th.
Ukrainian President Zelensky and BlackRock CEO Larry Fink agreed to coordinate investment in rebuilding Ukraine. BlackRock Financial Markets Advisory and the Ukrainian Ministry of Economy signed a memorandum of understanding in November. They had previously discussed driving public and private investments into Ukraine to rebuild the country in September.
Goldman Sachs is working on a fresh round of job cuts that will be unveiled in matters of weeks. Now, the Chief Executive Officer David Solomon announced the plan in his traditional year-end message to the staff. The job cuts will take place in January. Solomon said that the cuts are influenced by a slowdown of the economy due to tight monetary policy.
US-based crypto exchange Kraken said it has decided to cease its operations in Japan. Kraken will deregister from the Financial Services Agency in Japan from January 31st. This marks the second time that the company has departed from the island nation after it made a similar move back in 2018. The company blamed the decision on the rising cost of maintaining its business in Japan.
On the entertainment side, James Cameron's Avatar: The Way of Water has passed the billion-dollar mark at the global box office. Now, analysts warned against the sluggish sales in China, weighing on the film's final haul. Worldwide ticket sales for the Disney film now stands at close to 1.03 billion US dollars. Now, the milestone comes 14 days after The Way of Water debuted in theaters.
And the war in Ukraine seems to be escalating. The Russian foreign minister has warned Ukraine that it must meet Moscow's demand for demilitarization or the Russian army will quote-unquote solve the issue. Now, he also accused the West of fueling the war in Ukraine to weaken Russia and said that it depends on Kyiv and Washington on how long the conflict will actually last. Now, his comments came just days after the Russian president said that he is open to negotiations to end the war. My colleague Shrinjoy Chaudhary is joining us with more details on this. Let's take a look.
Days after Vladimir Putin, the Russian president, said that a diplomatic solution was probably something he hoped for, you've had the Russian foreign minister, Sergei Lavrov, saying that, well, Ukraine had to denazify and also demilitarize. And if the war had to end, then these things had to happen. Otherwise, Russia would do it for Ukraine. He also blamed Kiev and Washington, D.C. for ensuring the war has gone on for as long as it has, which is over 300 days. Now, how is the war going to end? That's really a difficult question, because both sides have different views about how the war is going to end. The Russians, of course, want Ukraine to demilitarize. On the other hand, Ukraine has completely different views. It wants every Russian soldier to leave the Ukraine first. Now, what is the Ukraine? Is Crimea part of the Ukraine? The Russians say that Crimea, which it took a few years ago, is clearly Russian. The Ukrainians believe it is Ukrainian. Now, these are things that have to be sorted out, and sorting these things out will not be easy.
Well, if you have watched the Netflix series Blown Away and ever wondered what goes behind making glass sculptures, that's exactly what Arjun Rathi and Ismail Plumber wanted each one to experience at their first of its kind art glass studio. Now, ET Now's Cheryl D'Souza got a chance to visit the studio in Coventry to understand what the second artists have planned at their rural modern art studio. Take a look.
Did you know that these beautiful lampshades are actually made via glass blowing technique? And this is actually made in the heart of Mumbai city. I will take you to rural modern glass studio to show you how exactly these intricate, beautiful lampshades are made. So come along with me. I'm at the Rural Modern Glass Studio, and with me today I have Arjun as well as Ismail. Hi Arjun.
Hi, welcome Sharon.
Hi Ismail.
Welcome, Sharon.
And I've heard a lot about what you guys do. I believe that y'all are the first art glass studio in India, isn't it?
Yeah, so I think like the studio, we started it last year, and we are hoping to sort of grow the studio to build a new language of glass art in the country and open the studio to other designers to use and collaborations, that can follow from there.
Great, so let's go about the studio and see how it is and how actually all of this work comes to play.
So here we have our main glass furnaces. This is the main glass furnace, which is on at 1150 degrees Celsius. It's on 24/7. We never shut it off. It's got clear glass melting in it. This is our reheating furnace called the Gloriole furnace. We spend about 70% of our working time on that furnace. So as glass is gathered from there, we work on it on the bench, and then we keep reheating the glass so it's workable again at that furnace. The last machine that you're seeing there in the series over there is the annealing furnace. So after the glass piece is made, it has to be slowly cooled down. And this furnace ramps the temperature of the glass product over 14 hours from 1100 degrees to room temperature really slowly. Since you guys are here, I'm going to show you all the glass inside the furnace. You should come here, Cheryl. I'll show you quickly.
I must tell you, it's really hot in there.
You've not seen how hot it actually is now.
Wow.
That is the molten lava that we gather the furnace and the glass from.
So it's about 1000 degrees, 1100 degrees right now. And it's as viscous as the honey.
Okay.
So that's how viscous the glass is when you have to manage it. And for collecting the glass on the pipe, you have to have the glass warm. So the glass will stick to the hot pipe, otherwise it will not stick, it will just flow off.
Okay. So what made you all actually start this particular
Well,
studio,
I've been a glass artist in the glass manufacturing unit at my own unit, and Arjun was the lighting designer. We collaborate on a lot of projects. So every time Arjun should come up with a fantastic project, and I should say that, boss, we have to have our own unit to make these things. And finally we did that. We put up our own unit to make fabulous stuff for us.
I'm sure it's very fabulous. I was actually blown away to say by the way how this technique actually works, and I must say it's a lot of hard work that goes behind each and every piece, isn't there? A lot of sweat also.
Absolutely. In fact, like it's a very patient process. Certain pieces, what you're seeing over here, like the candy or the glass plates, they all take 45 minutes to an hour to produce each piece. Yeah. And if they are not up to mark or up to the standard, we have to break it or we can't use it for a client, So that's when we start recycling our glass.
All right, so this is the studio right at the heart of Mumbai city. It is located at Chembur, and this is supposed to be India's first art glass studio where all of this comes into work. And yes, they also are eyeing the international market. So this is definitely a space that you need to watch out for, given the fact that we don't have much exposure in India.
All right, the first art glass studio. Somit, we should visit that very soon. And with that, it's time to slip into a short break. You don't go anywhere. There's lots more action on the domestic front on the other side. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and Somit Sarkar. Let's quickly move on to what's happening on the domestic front. Now, despite the rise in the number of COVID cases and COVID scare, the government of India is not planning to ban international flights even as coronavirus cases surge around the world. But it is planning to put some measures to track COVID cases, like we might see the reintroduction of Air Suvidha portal. What else can we expect in terms of COVID measures? I have my colleague Sameer Dikshit file this report. Let's take a look at what he had to say.
Some important updates regarding the COVID pandemic situation in the country that we are picking up from the health ministry sources. The source has indicated that next 30 to 40 days are going to be very crucial. It is very likely that in the month of January, the country may witness a rise in COVID cases. And that is the reason that the government is continuously urging the citizens to follow the COVID appropriate behavior. And in the same direction, we have seen that the government has conducted the mock drill at health facilities at more than 20,000 health facilities regarding the COVID preparedness, like the availability of ICU bed, the supply of liquid medical oxygen, the availability of vaccines and the medicines. Not just this, regarding the international flights, the government has clearly indicated that there is no plan to ban the international flights, but yes, Air Suvidha portal may be reintroduced from next week. So Air Suvidha portal is likely to be reintroduced from next week for the international flights coming in India from China, Japan, South Korea, Thailand and Singapore. It simply means that international flights coming in from these countries, they have to fill up the necessary details like the COVID vaccination certificate. In addition to this, the face mask is another important aspect, and the government has clearly indicated that yes, as of now there is no plan to make it mandatory, neither there is intention to put any fine on citizens for not wearing face mask in public places. But the government has continuously speaking quite loudly that yes, people have to follow the COVID appropriate behavior. In addition to this, we also got to know from our source that the Union Health Minister Mansukh Mandavia is going to visit Delhi airport tomorrow, that is on Thursday, to check the COVID preparedness and the testing facility at the Delhi airport. So by these sort of steps, government is trying to check that the situation which is currently quite stable in the country, it remains prolonged, and government has indicated that it is ready to take any steps if required regarding the COVID pandemic situation.
Well, thank you, Samir, for all those details. Now, moving on to an ET Now exclusive. Now, sources tell us that Sheela Foam is all set to acquire Kurlon Limited, which is the manufacturer of Kurlon mattresses. Now, the deal is set to be worth nearly 2,000 crore rupees. My colleague Sharad Dubey joins us with more details on the same.
Well, yes, from what we gather from our sources is that Sheela Foam will be acquiring the entire company for Kurlon for a stake of almost 2,000 crore odd rupees. And do remember, Sheela Foam is the largest player in the organized space for the mattress and is the only listed player. Now, apart from this, the combined market share of both the entities would be more than 50% going ahead. And in our inquiries which we had sent to the management of the company, they had stated that they won't comment on the speculation. But looking at the brand of Kurlon, it's a very strong brand. It's having a pan-India presence of more than 10,000 dealers, having 9 manufacturing facilities spread across the country. And if you see the financials itself, the revenue is almost around 1,000 crore rupees and the net profit margin ranges between 4 to 5%. Now, apart from this, the entire market size for this mattress industry stands at almost 15 to 17,000 crore rupees, out of which 65% of the market is in the unorganized space. Now, the important thing, development, is that Kurlon was once the second largest player when it comes to market share, but over the last 2 years, their market share has been declining. Now, it has become the third biggest player in the organized space for the mattresses, while the second biggest player has been emerged, a private company called Duroflex.
Well, that's an interesting deal that is developing, and interestingly, we also found out yesterday that there's one company called Maharashtra Apex Corporation Limited, which also owns a stake in Kurlon Limited, and that stock has been hitting up a circuit at least for the last 3 trading sessions. So we need to keep an eye out for this stock as well.
Yes, absolutely, Soumit. So do keep an eye out on that. Let's quickly move on. As we wind up the year 2022, it will be remembered as a rough year for IT. In fact, we have seen Nifty IT's performance really slip to post its worst year since 2008, down about 26% in 2022. Now, wage inflation, high attrition, earnings downgrade are just some of the factors that have really hurt the sector. Now, let me bring in my colleague Anisha, who tracks the sector, to tell us how the year gone by has been for the IT sector.
Well, IT sector has been seeing the worst performance since 2008. That's the kind of underperformance the IT sector saw this year. 26% is just in comparison to the 55% slide that we had seen back in 2008. So that's the kind of carnage we have seen as far as the IT sector goes this year. And there are a lot of reasons for the same. There were headcount challenges with respect to wage inflation, which was very high this year. You also had attrition sitting at quite high levels, and that is something that impacted the earnings and led to earnings downgrade in the first half of the year. Separately, if you look at the valuations at the start of the year, the valuations were quite high at around 36 times as far as the Nifty IT index is concerned. And other than that, you also had the rate upcycle coming in, which means that the DCF valuation for these stocks contracts a tad bit. It has been turbulent year for the tech, and look at how the valuations have panned out for the entire year. It started with around 36 times at the start of the year, and by the end of it, we were around that 25 times. But having said that, the valuations are still at a premium to what it was pre-COVID. Look at the orange bar that tells you where the valuations were pre-COVID, and the green one signifies the current valuation. And for most of the IT majors, the valuation is still more expensive than that pre-COVID times, telling you that there might be a bit of a downside as far as going forward picture is concerned. Let's also talk about the other internals with respect to the headcount issues, and attrition is something that I want to point out. This was one of the major problem areas for the company this year. Look at the way attrition has been inching higher from the levels of around 9 to 15%. It's gone all the way up to 20 to 30%, and that's the reason the margins were coming under pressure this year. Let's pull up the margin picture itself, and that will tell you that most of the companies failed to meet their own guidance with respect to target this year. From the levels of around 14 to 26%, the margins ebbed down to the level of 12 to 24%, and they're at multi-quarter low as far as the margin picture is concerned, and that also added to the pressure when it comes to the tech stocks. Headcount addition, which is one of the indicators or lead indicators of growth, that also has slowed down tremendously. In FY22, we saw a tremendous amount of hiring at over 3 lakh people. That's halved as far as H1 is concerned, and going forward, we're expecting a further slowdown in hiring, and that tells you that going forward, the companies are expecting maybe the growth is going to be slower. In fact, let's pull up the growth expectation chart, and that will tell you that while in FY22 we had seen growth of anywhere between 15 to 20%, double-digit growth coming across all IT companies, in FY23 it's expected to be high single digit or maybe low double digit, and in FY24 it's expected to taper down further, telling you that perhaps the best of growth for IT companies is behind us. Also, what is behind us is the best of rupee weakness. This time around there was a tailwind of rupee weakness, but the dollar index has already reversed from the levels of 115, so that weakness which was supporting the earnings is not going to be a factor. So what are the big trends to watch out for when it comes to 2023? The first question is, will it be a year wherein the revenue growth is a tad bit slower, but at least there is margin improvement, and that's why at the bottom line level things still look a tad bit better. The tech budgets are expected to maybe decline or remain at a standstill in 2023, because a lot of commentary, initial commentary coming in does suggest that there would be a bit of cut coming in tech budgets, and that would mean there will be more downgrades to follow. Perhaps we are not at the end of the earnings downgrade cycle yet. There's also going to be supply side pressure which is behind us, but still need to be watchful of that. And lastly, I'll just watch out for if there are more buyback announcements or capital allocation policy changes coming in, because buybacks has been one way in which IT companies has been returning the cash to the shareholders, plus have been able to maintain their stock prices. So this might be the this might be something that the oppressment will be of IT companies in 2023.
Right, so that was the roundup of the IT sector in 2022. Now, before we slip into a short break, let's quickly take you through the lineup and the action that's awaiting you on the other side. We have Rahul Bhasin, Managing Partner, Baring Private Equity Partners, on his outlook for 2023. We have Sanjeev Sanyal, member of PM EAC. We also have Rajesh Sharma, MD of Capri Global, on his outlook for 2023. And finally, we have Praveen Jaipuriar of CCL Products on commodity inflation easing. Welcome back. You're watching Market Cafe. And before we get on with the rest of the news flow, let's quickly mark the Asian markets. Asian markets have clearly taken a cue from the US markets. All the markets, Asian markets in the red. Nikkei and Kospi are down almost 1.5% in trade. Nikkei is down 356 points. Shanghai is down more than 0.5% now, and SGX Nifty, as you can see on your screen, is down 0.4%. It had fallen down, inched lower to 0.5%. It's inched up a little now, but all the markets, Asia markets, in the red. The COVID scare is clearly weighing in on the Asia markets right now. It is definitely hinting towards, even the US futures are quite flattish right now. It is hinting towards now Dow futures down 1%, and so is S&P 500 also, by the way, hinting towards a rather somber start for the Indian markets as well.
Well, now moving on to some stock-specific news, and we have Lisa joining us to give us the list of all the stocks that would remain in focus on the back of news.
Well, good morning. Starting with the apparel exporter stocks like KPR Mills and Irwin, that will be in focus today as the India-Australia FTA is expected to come into force today. According to Nuvama, Nifty indices quarterly balancing adjustment is likely today, where Axis Bank, Bharti Airtel, Adani Ports will see an inflow of around $11 to $21 million, while Bajaj Finserv, Bajaj Auto and Kotak Bank is expected to see an outflow of $12 to $34 million. Reliance Industries, Jio, has announced the largest multi-state launch of its true 5G services across 11 cities, and Jio users will enjoy unlimited 5G data of 1 GB per second at no additional cost. Ashok Bilcon has also announced that it has received an award of project cost worth rupees 754 crore from the Madhya Pradesh Authority. Spandana Spurti has approved the transfer of its stress loan portfolio of rupees 323 crore to an ARC under the Swiss challenge method for a consideration of rupees 95 crore. JSW Energy has completed the acquisition of its Ind Bharat Energy by paying 1,000 crore, and MAM has increased the stake in Mitra Agro Equipments to 100% from the existing 47%. Bharti Airtel is considering tariff hikes across India from February, and Pune Wala FinCorp has acquired the promoter has acquired around 43 lakh shares. Lastly, Shipping Corporation of India's final hearing is likely today to approve the demerger approval. So these are the stocks that is expected to be in focus in today's trade.
Thank you so much, Lisa. Do keep an eye out on all the stocks in today's trading session. We also have Vamakshi in the studio with all the brokerage notes that came in the morning. Vamakshi, take us through all these brokerage notes.
Well, absolutely. Let's first start off with Jubilant Foods. Now, we have a note that has come in from Prabhudas Leeladhar, and what they're highlighting is that they're expecting EBITDA margins to be lower by nearly 60 to 70 basis points. They're also expecting the pace of store additions to slow down a bit. The Q3 demand pressures that they're seeing are seeming to be transitory, and the risk reward is favorable as most of the headwinds are priced into the price. So on the back of that, Prabhudas Leeladhar has actually gone ahead and maintained a buy rating on the stock, given a target price of 610 per share. We also have VRL Logistics in focus on a note from Motilal Oswal. Now, price hikes that have been taken in the good business augur well for the company. They could support margins going ahead, and despite these price hikes, they're expecting the volume momentum to continue. The sale of the bus business also augurs well for the company. So overall, a lot of positives going in for VRL Logistics, and that is the reason why Motilal Oswal has maintained a buy rating, given a target price of 730 per share on this counter. Ambuja Cement is the next one on our radar after a note that has come from Investec. They're expecting incremental disclosures on synergy and scale additions. Clarity on group leverage may drive consensus earnings multiple upgrades going ahead. Further, strong Q3 earnings could also be a near-term catalyst for the stock, which is why Investec has initiated a fast buy rating on Ambuja Cements, given a target price of 752 per share. And lastly, we will be watching out for Ador Welding after a brokerage note that has come in from Nuvama. Now, they believe that the capex cycle will drive industrial consumable space. Healthy balance sheet and margin expansion potential is what the company has, and a merger with Ador Fontech Limited may expand the addressable market. So a lot of positives going in for Ador Welding, and that is the reason why Nuvama has assigned a tactical buy rating to the stock, given a target price of 1,050 per share.
Well, thank you. Sorry. Well, thank you, Amakshi, for all those stocks that would remain in focus on the back of brokerages. Apart from this, there's one more stock that would remain in focus, and that's Ipca Labs. Now, they had their analyst meet with Motilal Oswal, and we have Lisa, who has gone through that report closely and will be giving us the key highlights from that.
Well, IPCA Labs at its management meet with Motilal Oswal has updated on its business. They say that the domestic formulation business is expected to grow between 20 to 23% year on year for FY23, adjusting for the higher base of FY22. Efforts are also on track to generate around 1,000 crore sales annually from Zerodol brand franchisee. On exports, the management updated that they are likely to ramp up the API export sales to rupees 2,000 crore by FY27 from the current sales of rupees 1,000 crore. API sales is likely to grow on the back of new customer additions and new products. Exports, branded and generics formulation sales is likely to revive from FY24. Well, on these lines, IPCA Labs is expected to be in focus today.
Well, thank you, Lisa, for all those details. Apart from this, there's one more event that we need to keep an eye out for, and that is the MSCI quarterly index review. Now, this announcement date for this would be Feb 9, but brokerages have started to come out with notes on what could be the probable inclusion and exclusion from the MSCI index and in their quarterly review. Now, the announcement date, as I mentioned, is in February 9th, and the effective date for this would be March 1st. But the probable inclusions based on the price cutoff date of December 27th, according to MK Broking. Now, Bank of Baroda is one stock that could be included in the MSCI index. Now, MK is not expecting any exclusion from the index and only one inclusion, that is Bank of Baroda. Now, according to the brokerage, Bank of Baroda could have a weightage of close to 0.44% in the MSCI index, and the inflows expected, it could be to the tune of $145 million US, which is nearly 2.4 times its average daily volume. But do remember that Bank of Baroda had qualified earlier also when the MSCI semi-annual review was there in November 2022. But when the actual stocks were announced, this Bank of Baroda failed to make the cut. So again, the brokerages are now expecting that Bank of Baroda could be included in the MSCI India index when it comes to the quarterly review, which will be done in Feb 2023.
Right, and moving on, while India has ensured that it has got its supply side measures in order, preparing well for a post-COVID world, what we are now seeing is a capital-hungry country. That's the word coming in from Prime Minister Economic Advisory Council member Sanjeev Sanyal in an exclusive interview to ET Now's Nikunj Dalmia. He speaks how India has worked hard to clean up its financials. Let's take a look at a slice of this conversation.
Well, clearly few things that have happened. One is that the supply chains have perhaps fundamentally got rewired. The exact nature of that rewiring is still in play, but it is fair to say that the old wiring of the global supply chains, particularly the role of China, is certainly being revisited in multiple ways. Now, to some extent, it could be a fluid situation where we can insert ourselves, so that is something that could play to our benefit. Same thing is happening similarly with technology. One of the major things that happened in technology was that we all got very, very comfortable with doing business and basically leading life online, even more so than we ever were before. And this suddenly allows all kinds of other things that were not possible to do permanently at any distance can now be done. For example, medical consultations, legal work, and so on. Now, notice how this plays into our services exports strength. You know, we started out as answering for BPO phone calls and making Y2K corrections. Then we moved on to something that was quite clearly a back office outsourcing thing. But with this, where you're all used to doing and transacting business face-to-face online, it allows us to move into the front office in a very big way. And I think that trend opens up an entire new universe of businesses that now can be done based here in India, which didn't exist before. Now, this years that we have will be a particularly tricky one. You have a situation in Eastern Europe with the war. Oil prices have been spiky. COVID caused a lot of disruption the last 3 years of G20 presidencies. So this will hopefully be the first full year of opening But even there is a cloud because of what's happening in China. Global economy may be slowing down. The Fed is at least still tightening. We don't know how that will play out, but maybe they'll stop, maybe they won't. But all of that means that the waters in front of us are very choppy. And this is a good time, therefore, for India to really, one, provide leadership because it's needed, and two, be able to shape the contours to some extent of the post-COVID world, of which, by the way, we should now be clear, we are no longer a trivial side player. We will be, by the end of this decade, or well before it in fact, the world's third largest economy. We will very soon be the world's largest population. And I think, therefore, we need to get comfortable with the business of punching our own weight.
Well, the big push to both rail and defense sector under the Make in India is bearing results. Now, the stocks are up and expectations are also high. My colleague Lisa gives us more details on the same.
2022 has set the wheels in motion for two sectors, namely defense and rail. Well, talking on the defense sector, India has truly showcased its capability in 2022. And that is clearly visible in the way the Nifty India Defence Index, which was launched early this year, has performed. YTD return is more than 60%, clearly outperforming the benchmark indices. Early this year, the defence budget for FY23, it increased by 10% to 5.25 lakh crore from the earlier estimated outlay, and that was to give a major push on ensuring Atmanirbharta in defence. The defence exports also were at a record high in FY22 and it stood at 13,000 crore, a whopping 8 times growth compared to what it was 5 years ago. And this includes the first export order of BrahMos missile to Philippines of rupees 2,700 crore. Government has also set an ambitious target to achieve exports of about 35,000 crore by 2025. Of the announced projects, major share is towards the aircraft and helicopters, followed by defense warships and missiles. Well, that provides large ticket opportunities for the Indian defense manufacturers. In 2022, we saw active participation from the government to boost the local sourcing and exports. In this regard, major landmark announcements were made in the defense sector, namely the introduction of Agnipath scheme to bring the youth into the armed forces. India's first indigenous aircraft carrier, INS Vikrant, was also commissioned. Positive indigenization list was also released to minimize the exports. And the 12th and the largest ever defense exhibition, that is the DEF Expo 2022, was also held this year. Well, the outlook for defense in 2023, it looks positive as the scope for domestic orders across the defense services remains very strong. Increased participation of the private sector as well as the foreign companies will also be seen, and 2023 will also see increased budget allocation towards the defense for domestic procurement. Well, now moving on to the rail stocks. Rail stocks also caught the super fast track in 2022. The government railway capex push forced the investors to take a closer look at the railway stocks. The stocks rallied anywhere between 20 to 120% this year. The total capex spending on railway for H1 FY23, it stood at rupees 88,548 crore, which was a stupendous increase of 91% year on year. Moving on towards the modernization, Indian Railway also recorded a growth of 25.3% in electric locomotives. The proposed order book for Vande Bharat also saw an increase in 2022. Well, 2023 will see us moving towards modernization of the Indian Railways. There will be 100% electrification in the railway network, rejuvenation of the railway stations, high-speed trains, that all will lead to positive capex momentum in the upcoming budget, which is expected to increase by 25 to 30%. So, well, we can say that 2022 was truly a watershed year for both the defense as well as the rail sector.
Well, a watershed moment for defense and the rail sector. With that, we're completely out of time on this show. Thank you so much for tuning in. Don't go anywhere. There's lots more action lined up for you on the market.